Live streaming is on.
All right, good afternoon, everybody. Event Trader here, and I'm joined by options trader Brandon Mars. And we are going to talk a little bit about options expiration today. But before we get into that, Brandon, I'd love to get your thoughts on the markets here. Obviously, I got the NASDAQ chart up right now, NASDAQ futures. Again, we're on the September contract. We got the roll this week and just watching it basically straddle around that 15,100 level. Uh, Tech obviously continues to be a strong contributor. It is up 0.71% today. The S&P running lockstep with that at the moment, up 0.71% itself, trading just above the 4,400 level. And then we've got the Dow here up 0.59%, a small laggard, but playing a little bit of catch up. And finally, the Russell 2000 small caps leading the way up 1.25%. So we've got all this following the CPI and, of course, in front of the Fed. So, Brandon, I'd be curious as to hear your thoughts on what's going on in the market right now.
Yeah, so I've been in the bullish camp for quite some time, just looking at the charts. I mean, that's where the momentum's been, and even I'm a little surprised. I mean, there's been barely any profit taking here today or yesterday, which you would think you would get just a little bit. Just human
Yeah,
nature.
it is
We're up.
shocking, right?
Yeah, I mean, you just kind of like the human nature. We're up so much. You've got the potential inflation risk. You've got the Fed risk. You'd think that there'd be a little bit of profit taking. And I mean, I guess I could probably search the market and find it here or there, but I'm looking at the charts right now. I mean, you've got on the Qs, you've got kind of an ascending triangle going. You've got one on the Dow going too. I mean, the market actually looks like it wants to break out even higher right now. So, I take that with a little bit of grain of salt since we do have these events coming up, how much gas is left in the tank for a big breakout. But I'm not exactly looking to bet against it too much. That's for sure.
Right? Doesn't it feel like everyone's just waiting for a pullback to buy anyway, even if we do get the shakeout? And I feel like everybody knows that, and that's why nobody wants to sell. That's kind of the feeling that I'm getting out there.
Yeah, I mean that's kind of one of the risks, and I mean it's kind of
It's
one
a
of the
risk.
yeah.
I guess that's how irrational exuberance begins, right?
Yeah, exactly. I mean, we'll talk about it a little bit more as we get into the options expiration day, but it feels like maybe they do some quick rug pulls. But like you said, I mean, I think people are kind of just sitting there waiting, like, all right, well, thank you, and we're gonna hop in now. So, we'll see if they do that. But the chart definitely looks pretty strong.
Yeah, because I was feeling okay here. We're getting the profit taken now. Last Thursday, I think it was that day when we had that rollover in the mega cap tech, and everything was rolling into the energy and financial. So it was more of a rotation than really pure profit taking and heading to the sidelines. But man, those things ripped right back up on Friday, and that's kind of the sentiment that I'm seeing out there. Is like any sort of dip, people are like, okay, I'm not missing this run. I'm getting in, and I'm going to be fine because there's nothing out there really scaring me. So, what do you think could unseat this? I mean, I was kind of talking. Somebody was asking me if they thought that the Fed was going to be a sell the news event, and I don't really see that as a possibility, barring the terminal rates put over 6%, or and Powell starts talking about 50, 75 basis point hikes at the next meeting or something. But I think people are kind of prepared for a hawkish Powell. I mean, what's your thoughts going into this Fed meeting?
Yeah, I mean, I think it would take quite a bit to derail this. And I think kind of like we just said, I mean, maybe if he came out as hawkish as could be, maybe they drop the market down 2 to 3%. But, as long as we maintain some of these trend lines and we didn't have such a major breakdown, I think that'd just be a buying opportunity at this point, right?
It feels like that, and that's what makes me nervous. when,
Yeah.
when it feels so easy, you're just kind of like, well, something's got to give here. But man, I just don't see it right now. So unless it's the price action itself, um, other threats, I guess, that I would say is if we saw a lot of negative sell side commentary. I mean, we've kind of seen some of that coming from the Morgan Stanley Financial Services Conference, but nothing egregious there that scared people off, and you could easily argue that this has been priced in over the last couple of weeks. And then the other thing I guess that I'd be looking at is, you see a name like Home Depot, where everybody's expecting consumer discretionary to kind of fall off a cliff, and they're reaffirming their FY23 outlook, which I thought was pretty impressive in this environment. So yeah, something's got to give. I'm guessing maybe a weak Q2 earnings, but it's tough to bet against anything right now.
Yeah,
So,
no, absolutely. And I think if I even saw the sell side commentary coming out, I'd probably even become more bullish.
right, right, who is it that downgraded Apple today? Was that UBS?
I didn't see that, but I did. I mean, that's a couple downgrades now for Apple over the last couple of weeks, which it probably means we should go buy calls, right?
Right. That's certainly what it seems like. I mean, it feels like they're just downgrading it out of boredom too, more than anything else. It's like,
Justifying the paycheck.
yeah, it's like, watch me mess with these people. I'm going to downgrade Apple and watch their heads explode. But yeah, is there any sector that you're looking at in particular for buying?
No, I
Anything
mean,
jumping out to you?
I always tend to gravitate towards the tech stocks just because those, generally are, I think, the more fun options traders. We think we got to keep a little bit of an eye on this rotation that we've been talking about. Maybe some of it's getting a little ahead of itself. Yeah, I was actually looking at Caterpillar. I mean, geez, what a run that thing has
Yeah,
had.
deer as well too.
Yep, deer as well. So, kind of maybe being a little bit cautious once those stocks start piercing way above the upper Bollinger Band on the daily charts, I start to just get a little not skeptical, but a little hesitant to dive in with calls. But yeah, I mean, definitely keeping an eye on this rotation, and you've got things like financials. I mean, those aren't extended. There are still some things that can play some catch up out there. So trying to maybe keep an eye on some of those things, and just keeping an eye on some of the tech that's just not super, super heated and, way above its upper Bollinger Band.
Yeah, no, that's good. Now, would you do any covered call strategies with this?
I mean, for me right now, that's just betting against this momentum. So that just makes me a little bit nervous on that side. I think actually the theory behind that makes a lot of sense because but you got to be cautious with it, right? It's like Caterpillar, it's going to take a breather here right after this run, but it's a matter of when and, how much higher does this momentum take it before that actually happens. So I just always get a little hesitant betting against momentum.
Yeah. No, I'd agree with that. I mean, it's a tough way to make a living trying to swim against the current. That's for sure.
It is. Yep.
Let's talk about some of your options trades that you've put out the last couple of days here, Brandon. We'll just kind of go in reverse chronological order, starting with Zoom Video ZM, which you were buying the Friday 70 calls around 112. What was it that you liked about Zoom Video?
It's so again, just a not extended tech name, and it's been kind of coiling, almost a little bit of a triangle pattern forming on the daily chart. So I was keeping an eye on it, and then I was watching it today, and it actually had a ascending triangle on the intraday. So that got me intrigued. And then it broke below the triangle, but then all of a sudden a big spike in volume occurred. And sometimes when you get these technical patterns, if you get that, basically head fake, that can be one of the best times to buy. So, I always get intrigued with a volume spike, but in particular, I haven't traded Zoom in a while, but in the past, when you'd see some of these big volume spikes, it usually led to a decent move. So I saw that happen after the triangle break and jumped on it. Unfortunately, it's drifted a little lower. I mean, frankly, it's been weak, starting to kind of climb its way back here. So I still like the trade. I just kind of dipped on me a little bit more than I wanted. And, that's kind of one of the risks with options and technical patterns. That happens, unfortunately.
Next up, I'd like this call that you had this morning. You're buying some puts in CRM. Obviously, this would be one of the counter trend trades that we were just talking about here. So you do have something on the short side in case things break down. And CRM certainly broke down following its AI day yesterday, slipping below the 20-day moving average. Is there anything in particular that jumped out of the screen on you for CRM? And out of curiosity, when you entered this trade, what chart were you looking at? What time frame?
So I happened to be looking at the 5-minute at the
All
time.
right.
And yeah, so CRM, I mean, a little bit of a breakdown, like you said. That's kind of one of the things I like to gauge is whether a stock's above or below its 20-day. And if you're looking for a name to short in this environment, if you do find any sort of tech that happens to be below its 20-day, that kind of stuff gets me intrigued. Again, it's a counter trend bet, so I'm taking it with a grain of salt, and I'm kind of surprised that I even took it because I've been so bullish, but just kind of wanted to have it on because we did see a few signs of selling here and there. And, this made a pretty nice little dip down to the 207, or excuse me, like the 208 area. And then it just kind of slowly started to climb back towards 210. Felt like the move back over 210 was maybe a little bit of a bull trap. So that's kind of when I jumped in on the put, and it's continued to drift lower. And the Dow, it's had a pretty steady climb. It's kind of building that triangle that we just discussed, and CRM just really hasn't participated. And then if you click over onto the 1-day, I mean, we still got a couple hours to go here, so subject to change, but that's shaping up to be a pretty bearish candle on the day, and it looks set to close below its 20-day. So, it's got a little weakness to it. So I like to trade and, see if it maybe move back down towards the 208 or maybe even the 205 area if it breaks below that. But take that with a grain of salt because computers are set to buy right now.
What if it closes above the 20? Does that change your focus on this?
That absolutely would change my focus on it. Yeah.
Okay, and I got the 20 at 211.67.
Yep, that's what I got it at as well.
Okay, so keep an eye out on that if you're involved with Brandon in this trade. So moving on to some of your other recent ones, Goldman Sachs, GS here. I like this call as well. You bought the calls. It's had a nice little break above that 200-day moving average, sitting right at 340, which is where you have your calls. Of course, is that by design?
I had that because of the 200-day. Yep.
Yeah,
And still just a round number as well.
right,
So yeah,
right.
Goldman got out of this one a little too early today. Anytime I take risk overnight into an event like inflation and I get a gap up in my favor and it's, ended up being like a 40% return, I'm usually pretty quick to take that just because I did take that risk, and it's, 40% in the first 5 minutes is always kind of nice. And with Goldman, we did see yields dip down after the report. I don't necessarily love holding financials when rates are dipping. They've since recovered. So kind of just jumped out of that one a little bit too early. But yeah, I like financials into the report because one, they weren't too extended. And if we did get any sort of uptick in rates, it can be a tailwind. If it's too hot, then, everything kind of gets smoked. But I kind of like financials into a play like that for that particular reason. Just got out a little too early, but a win's a win.
All right, and you bought Lululemon calls, one of the top retailers out there. It's last couple of months not as strong as it's been in the past for sure, more, but it has been riding that 50 monthly chart, moving a little bit higher. That 380 area here where it's kind of tested and watching that closely. I got the monthly chart up right now. You could see that's kind of been a pretty solid resistance area here. So what attracted you to Lululemon, and what are some of the key levels that you're kind of watching?
Yeah, so you had that really nice gap up after the earnings, huge move actually. You saw quite a bit of selling once it did hit north of that 380 area, but you had that big day after the earnings, and then you had 3 down days, and then you actually had a green candle. So I'm looking at the daily chart here, kind of like a hammer candle, actually. So, when I find setups that are post earnings or post news, whatever it might be, anytime you get that big gap up and kind of the flag consolidation or a pullback, and then you get some sort of reversal candle, like we saw on what day was this here? On June 8th. For me, that starts to intrigue me. And from there, you kind of look at it, and had its 20-day moving average not too far from it. Once you get that pullback, you just kind of start to think, okay, well, it's probably going to gravitate back towards its 20-day and at least test it. So that gives you an opportunity for a quick trade. And then if it breaks through, you've got, a little bit more upside. And then all of a sudden on the 20-day, had that really nice move on, what was it, Friday, the 9th. Then all of a sudden you've got the 50-day that's in sight, and you've got another kind of magnet above it. So real nice 3-day move, and, no surprises today, taking a little bit of profit here, but maybe that dip below the 50-day could be a little bit of a bear trap. Probably if it works its way back over that 367-ish area is probably going to create another potential for a pretty good trade.
All right. And the last trade we're going to talk about here that you got on is NVDA. Those 395 calls up, trading at 408, edging up. What's the all-time highs here? 419, right? 419.38 on the 30th. But this just remains a beast out there.
Yeah, just a total beast. So I got into this yesterday, and this was actually I was watching again the 5-minute chart, and I think NVIDIA is just one of those names that's just kind of on my radar every day right now. And it was just forming this big old pennant all day long. And then towards the afternoon, it just, boom, it hit that equilibrium point of buyers and sellers and took off. I mean, it moved from 388 to 395 in basically the last hour of trading. So just a big move as it broke the pennant. Again, that one moved so quick. I got out of it a little too soon, and I probably would have carried it overnight if it wasn't for the inflation report. Obviously, looking at it now, kicking myself just a little bit. But it did actually feel like today was maybe going to be, just for a brief moment, felt like it was maybe going to be one of those days where the semis and some of the tech sold off a little bit. And yeah, I guess you just can't keep NVIDIA down. It sold off a little on the gap up, and it is right back up at the day highs. So
Yeah, just a beast. I mean, I took this SQQQ myself just to have something on in case we started ripping higher here. But I mean, that's I'm near my entry, so it's not nothing too bad. But boy, it's been tough to try to find anything on that short side. That's for sure.
it really has been.
So let's take a quick look then to Brandon at two names that you got on the radar. Caterpillar, you were talking about that before. Any follow up on Caterpillar? Yeah, it is potential.
For me at this point, that thing's just moved. I'm not saying, go and sell it, go and bet against it at this point. I just get hesitant to jump in on calls. Maybe if we saw some of that China data that you've been talking about, to maybe give it a boost to 250. But at this point, I'd maybe like to see a little bit of digestion, a little bit of consolidation on it.
Right. And then Marriott is another name that you put on the radar this morning. What is it that you're seeing in Marriott? What could trigger you to make a move on it?
Yeah, so Marriott, it's kind of got a little bit of a triangle here on the daily chart dating all the way back to March. So it has just been testing this 181.5 area. It's coincidentally at 181.5 as we speak. It's been testing that, let's see, 1, 2, 3, almost 5 times now since May. So it really looks like one of these times it will finally break out, and it should go to test like the 185 slash the all-time high areas, up in the 190, 190 and a half or 195 range. So this one can be a little bit of a tricky one, I think, day trading wise, but I mean, that chart really looks strong, and I think a close above 181.5 today would be a pretty good sign for the stock.
All right. And then just a quick request, Brandon. SMCI, super microcomputers. Somebody was interested in your thoughts on that.
SMCI. It's not one I have looked at, and I can't tell you how long. Yeah, I mean, that is a nice move. I mean, is that stock doubled since the beginning of May?
Pretty much, yeah.
Yeah, I mean, it looks like today wants to have a
More
little
than
bit of
doubled.
profit taking. I mean, geez, I think if you got in this morning off of that move to, what was it, the 230-ish area would have been nice. Yeah, I mean, this one definitely looks like a buy the dip candidate. I'd probably be pretty interested. So one thing I kind of look at is, so if you look at kind of that tail from May 30th, the upper wick, that is at 243. So, that's kind of going to be a resistance level that I'm going to look at. And coincidentally, it's at 242. So if it closes above that 243, I'd probably become intrigued. Above 250, probably even more intrigued. And then, I don't think we'll get this, but if you saw some sort of dip down on the Fed or profit taking, whatever headline you want to call it, the 225 area would be very interesting. I don't think we'll see this, but the 20-day would obviously be very intriguing on a name like this, but don't hold your breath.
if it got down to the 20-day, I might start getting nervous personally. Because for me, I would be looking at anybody that piled in here following this breakup of the 24th, which I'm assuming is an earnings breakout. I know that would have been right around NVDA's earnings report, right?
Yes, that sounds about right.
So I don't know if they came out on that same day, but I'd be a little nervous if it got all the way down to the 20 on this thought process. Basically, the idea that there's some trapped longs in there that chased in after it that weren't the buyers through that month of May, and I would see that as weekend-ended longs potentially.
Yeah, I would agree with you on that one. So I should clarify my point there. I was thinking more if the 20-day happened to catch up to it. So
yeah, got up
at
that
this
220 area.
Yeah,
basically.
at this point, I mean, through price and time, if the 20-day caught up to it and like the 220, 225 area, that would be a little bit more intriguing. Yeah, I'd probably be a little nervous myself if it dipped all the way down there.
Yeah, no, I'd agree that because I was looking at that 215 to 220 area as being like the last stand. So yes, I think we're on the same page there because you're of the opinion that that 20-day obviously should start coming up a lot quicker, which I would agree with. So, all right, Brandon, let's talk a little bit about some options theory here. And obviously, this Friday, we've got quad witching. If the market didn't need one other major event for this week, here you go. So we talk a lot about options expiration days. Obviously, you got the weeklies going every Friday, and you talk a lot about that. And the primary ones that we follow are those monthlies, the third Friday in the month. And this time around, we naturally have quad witching, which is, of course, the quarterly expirations as well. So, what I wanted to talk to you a little bit about was, we talk about some of the actions that these guys are taking. I mean, just the sheer size of this, which I know you'll be discussing here shortly, is just really unbelievable. I don't think that people sometimes realize how much money is being put to work just on that options front. But let's talk a little bit about quad witching and options expiration. So if you want, just kind of run through your thoughts about quad witching and some of the things that you look for. But first off, I guess let's keep it simple. What exactly is going on for during quad witching?
Yeah, so quad witching or Freaky Friday. So the third Friday of March, June, September, and December. So on that day, you have stock index futures, single stock options, options on stock index futures, and stock index options all expiring in one day. So, basically in layman's terms, it's just a boatload of derivatives that all expire at once. So, you and I have talked about the numbers. I mean, they've been ranging anywhere from, $4 trillion worth of notional value from the December expiration. The March one was 3.3 trillion. And I still haven't found a number for what's coming up on this Friday. But if I had to take a guess with the market run recently and people piling into calls, I would say it probably hasn't gotten much smaller than the past expirations.
Yeah, I was digging around. There's a Goldman note that I get every once in a while on the quarterly, Brandon, that talks about it, and I do recall that December was the highest, but I think it's in that 3.3 trillion range or something along for notional value or something along that. I know you found some stuff that was suggesting 4 trillion, which would make sense that it keeps going up because, as we know, options expiration or options players just continue to grow in excitement. So it is an absurd amount.
Yeah, it's really crazy how much is underlying these options. And you can buy them for so cheap in certain cases that you just really don't think about the total underlying value. But yeah, I mean it basically just leads to a day of, generally speaking, super high volumes and potential for volatility. So it can be a crazy day. It can be a day that frankly, you need to take a little bit of caution on. I think there's opportunities to make money out there, obviously off any time there's volatility, but you gotta kind of watch yourself. One thing I wanted to kind of point out is it's important to know that it's out there. But don't let the day consume you. When I was a young trader, I used to go into quad witching day and I was like, oh, okay, well, there's X amount of put volume on there. So that means they have to do this. And that's definitely what's going to occur on quad witching day. And I'd get so consumed by that thought, I would just forget to watch the price action and it would cost me. So, I think it's important to know that it's out there, but, go about your plan, have your trading plan in place and, be probably a little bit more, on your toes, and maybe don't enter into the day thinking, oh, it's quad witching and there's volatility and, I'm going to get super rich today, but there will be opportunity.
I a lot of the times don't even trade on quad witching. I just prefer not to get involved in the shenanigans because when I was on the other side of things here and on the news in place side, the amount of rumors that would come out, Brandon, with just from my take, it was people planting those rumors trying to get a stock to move in a certain area. There was always those takeout rumors, or Russia was bombing Alaska, or something like that was always going on. Have you noticed that type of activity too?
There's definitely that. I mean, I think at this point, they just honestly also don't need a headline. It's like, all right, well, there's a bunch of Apple calls. We need to kill the premium. Like, let's just pull the rug and stop buying, and that's where
Right,
you
right.
see kind of some of those big out of nowhere dips. And on quad witching day in particular, you got to be careful of those. I mean, you could look at a chart and it could be as bullish as could be, and then all of a sudden you go to grab your cup of coffee and your stock's down a couple percent in 5 minutes. So yeah, there's definitely those headlines that are, we'll call it, floating around, if you will, and then I think there's just rug pulls and spikes just out of nowhere. They're good at it and they know how to do it, and they execute them well.
Yeah, Yeah, no, that's definitely the case. So, um, and we're going to get into who they are and stuff in a second here, but I did want to just kind of going through your notes and bringing things around with you here. You noted that witching hour between 3 to 4. So you want to just kind of explain that?
Yeah, so between 3 to 4 is usually when you're going to see your highest volume. So you got to take some extra caution here on this day, especially if you have open contracts that are near the money. So I think that's where you become very vulnerable to the spikes, the rug pulls, and then also pinning, which we'll talk a little bit more about. So you've kind of got all these different things basically that you have to navigate in your roadmap. Um, so at the close, you need to be careful because you could see all of a sudden these big spikes or drops just as the big market makers make their last second adjustments. So be careful, because if you are near the money on an option, you could literally look away for a minute and all of a sudden that could be in the money. And then you're going to get a lovely expiration on, or excuse me, assignment on your Saturday morning. So just be mindful of that. I think this is one of the areas where a lot of risk, a lot of potential return, where if you catch one of these spikes on the correct direction, that, if you're going the same direction as some of these algorithms, I mean, I don't want to make any false promises here, but there's definitely options trades at the close that go 50x in 5 minutes. But you got to be very good on your timing. You got to be very cautious, and frankly, a little bit of luck there. So kind of, I'd say be careful playing that game. And if you do anything like that, just I would say keep your risk very manageable and just be careful with closing out those options.
All right, and then what some of the patterns you see on volume around these days?
Yeah, so it tends to be one of the higher volume days of the entire year. So, if you take a look in the morning, one thing that threw me off guard my first couple quad witching days is the first 5 minute candle is probably going to be 2, 3, maybe 4 times the volume of the 5 minute candle of the day before. So I remember the first time I saw this big, huge green bullish candle. I saw this volume. I was like, oh, wow, this volume, this is conviction. This thing's going to soar all day. And I quickly learned that was just part of quad witching. There's just a mass rush of orders that happen at the open. So just, kind of take that first 5 minute candle with a little bit of a grain of salt. And then you'll see high volume throughout the day and again into the last hour. And then one thing to be mindful of, looking at the charts the following week, I always look at volume of how much conviction is within a move. And you'll look at that Friday and you'll see a huge amount of volume. So just make sure when you're doing your analysis the week after that you're not looking at that and saying, oh, on Friday, this move up was on 3 times normal volume. So, it's going to be a huge rally. Just you'll notice that it's like that on all the stocks out there.
Okay. Now you noted the big rug pulls, the big spikes, and everything. That's obviously there's some folks out there being like, "Oh, you could probably make a lot of money if you guess that right." What's your thought process on that, Brandon?
Yeah, I mean, you definitely can make very, very good money if you do catch those. Obviously using your usual chart watching is important, but some of these just kind of come out of nowhere. So that's kind of where I was saying, be cautious. Like if you're sitting on 100% profits on an option on expiration day, just keep in mind that the market makers are probably at one point going to have to balance their risk of those particular options, and they're going to move the market in a way to make those not worth as much and to balance their risks. So um yeah, definitely kind of look out for those big reversals. If you see like a huge hammer candle or something after a big downtrend um on some like super high volume, that's probably going to lead to a potential reversal. And you know, I think if you do catch those on expiration day, they can be very, very fruitful, and they can move very quickly, and they can also move quickly against you. But definitely a lot of money to be made off of them if you catch them right.
All right. So we've had the discussion on things to watch for quad witching. You know, took a look at volume and some of the pitfalls that could occur here that you need to be careful of. But let's talk a little bit about how the sausage is made here, Brandon. And what I want to ask you, and for you to relay, you don't have to get too deep into the weeds. Obviously, there's going to be a lot of terms that are probably going to be new to some of the traders, especially those that don't follow options. But why don't you just kind of give us your thoughts on what exactly is going on behind the scenes? Like, what are these money managers, these market makers doing, and to cause some of this activity? And importantly, why are they doing it? Is it that they're looking at the strike prices where everything's pinned and they're trying to push something towards it? And if so, how are they doing that? And just kind of give us an idea of what's going on behind the scenes.
Yeah, so why don't I start just talking about pinning, since you just mentioned that. So, pinning a stock, I mean, that happens every expiration day. It doesn't happen on every stock. It doesn't happen, every week per se on each stock, but it can be accentuated during quad witching day. So again, you kind of got three levels of risk. You got the spikes, you got the rug pulls, and then you've got the pinning. So, pinning, they're basically literally pinning the stock price to a certain level. So, let's just take, I don't know, let's take NVDA here. NVIDIA is trading at 406 right now. So I wouldn't be totally shocked here if all of a sudden by the end of the week, that thing started trading up around 420. Well, let's look today. The most highly traded contract is the 420 strike. So as we get closer to the end of the week, what they'll do is they'll essentially pin that price to one of the most highly traded options contracts throughout the week. And what that is it's one, they're killing off premiums. That is one of the things that occurs. And the other thing that occurs is you've got all these different market makers and players on each side of the table. And there's gamma and there's delta risk. And basically what they have to do is they have to manage out their risk of what they have open for puts, calls, what they're long, what they're short. And what they'll have to do is they'll have to buy and sell stock based upon what their books look like to manage this risk. So you'll end up getting basically a bunch of buying and selling back and forth as they manage their risk. So one, they're doing it for the risk. And then two, they are doing it because they're trying to kill off premiums. There's a thing out there known as the max pain point. And it's unbelievable that this is somehow legal out there and it's an actual Wall Street term. But the max pain point is essentially where the market makers can look at all of the contracts that have been, bought and sold and where they can end the price for the week and basically inflict the most amount of pain onto the options buyers, aka where we make the most profit at the end of the week.
Makes sense. I mean,
So
and they know where all the bodies are hidden too, right?
they
Since they've
have,
written most of those.
yeah, they have, I would say, very smart people with very good computer systems, and they know exactly where the bodies are buried. So, we as, retail traders, we can look at that too. You can watch the option activity throughout the week and you can see, where the most heavily traded contracts are and where the open interest is.
Do you do this primarily on your Thinkorswim platform?
I do, yes, just because
Yeah.
that's kind of where I live most of the day. So, that's where I see that. And, it can be a little tough to tell and to make, educated guesses because, again, just even on the video alone, it's only 2 o'clock and it's traded almost 1 million contracts today. So, it can be a little hard to make those estimates on our own. But, if you start watching it throughout the week, you'll see where the contracts are traded. You'll see where the open interest is. And then you can start to use, technicals too. If a stock is trading at, I don't know, $99, let's say, towards the end of the week, and there's a moving average at 100, and 100's a round number, well, there's a good chance that it gets attracted to that price. So that's where that particular, contract might trade a lot of options. So yeah, you've got kind of those two factors of basically killing off premium and then balancing of risk amongst the market makers, the option writers, hedge funds, basically every market participant, of balancing their risk. And you're going to start to see that buying and selling, creating essentially an equilibrium. And then, some of those rug pulls and spikes, you get situations where you'll have, like a gamma squeeze. If anyone remembers that term from, the GameStop days, where all of a sudden the market makers will have written all these contracts and the price has spiked on something. NVIDIA is probably a good example. It will create this forced buying, essentially, of shares to balance out their risk. Well, the market makers aren't going to give away free money, and they might not want to own as many, NVIDIA shares, or, they might have a huge imbalance of risk of all these contracts that they've written. That's when you see the rug pull. All of a sudden, they're going to pull that rug and they're going to balance their risk, and, people are going to get burned in the process. So, that's kind of one of the things that happens and kind of creates this smorgasbord, if you will, of, different landmines to navigate throughout the day.
Do they ever work with other houses in conjunction with this? I was just thinking when you were talking about looking to balance risks and stuff. Back in the day in college and stuff, me and my roommates ran a bookie operation, and if you had too much money on one team, you'd always look for another bookies and unload some of that risk on it. Does any of that action go on?
I'm not 100% on that. If I had to take a guess, I would say yes. I mean, just, again, these market makers have quite a bit of ammo on their books as far as capital, and they're very good at balancing their risk. But when you've got $4 trillion worth of, derivatives that are all expiring, I mean, that's a lot. And when those things get moving, and, I've maybe heard that some of the Wall Street firms like to mess with each other throughout the day.
I'm sure they do.
If I had to take a guess, there's probably, some of that involved. Maybe a little bit of water cooler talk here or there of what moves they were going to make throughout the day.
Right. Let me ask you, what's like a sign that you're like, oh, these guys are trying to pin this stock? Is there anything out there that kind of alerts you to that, Brandon, or is it just the general underlying feeling of the how the stock's trending on the session?
Yeah, I mean, a little bit of it is just you get caught in the chop, and you sit there, and they're very good at making it look like it's going to break out and break down. And you get excited that your option's going to pay off, and then all of a sudden it's 359, and you're like, oh, well, that one didn't work. So definitely a little bit of that. One thing that I found is, some of these big movers, like a NVIDIA, you're, again, I don't know what's going to happen Wednesday or Thursday, especially with the Fed, but if this thing continues on its trajectory and it gravitates towards that 420 level, my guess is they're going to have quite a few call contracts that are going to be bought on that. And, I think it can be a great Friday day trader, but if all of a sudden this thing's made a move from yesterday's low of 386 to 420 by the end of the week, there's going to be a lot of calls in that. They're going to have to pin that or move that back down to balance their risk in some way. So, some of these big movers that have like moved to the upside or the downside all week, tend to kind of catch my attention a little bit. And some of those too, I think on the flip side, are also good candidates for those rug pulls. Because if NVIDIA does, in theory, move from 386 to 420 by the end of the week, and they've got all these calls that are out there, well, at some point, they're going to make some sort of move to counter those calls. So again, I don't want to say rush out and like try to short NVIDIA, buy puts on it, but it has opportunities for some of those quick, big money making opportunities that, we talked about at the beginning of the call, where you might see a big spike up. That's kind of the one last big push that the market makers are going to make to draw the longs in, and then all of a sudden they'll drop the price. It could be a quick, scalping put opportunity. Again, there's a lot that's going to happen between now and then. I'm not saying rush out and do that. And NVIDIA getting against that one in particular has been kind of painful. But that is just kind of an example, if you will.
No, that's a good example, and obviously a lot of eyeballs in on that stock, to say the least. So, all right, Brandon, anything else on quad witching that we need to know about?
One thing I think probably on a lot of people's mind, is it a bullish or a bearish day? I couldn't really find any concrete evidence on this one. It seems like it can go either way. If I'm missing anything and anyone has a great website that says otherwise, I'd definitely be interested in knowing what that is. One thing I did read is a lot. It tends to lean towards the current trend of the market.
I was just going to ask you if it's a counter trend trade or anything like that, but you find more often than not it trends with the market.
That is what I found. So, part of quad witching is you need to do something with these contracts, right? You need to exercise them, you need to close them, or you need to roll them. So, right now there's probably a little bit of a bullish tilt on the derivatives that are open out there. So, in theory, if all of those had to get rolled or were rolled to, the next expiration, I guess that in theory could add a little bit more fuel to the fire here of this particular rally. So I've found that it tends to go with the current trend, but it seemed like it was kind of a mixed bag on whether it was a bullish or a bearish day.
Okay, all right, there we go. So a bit of a coin toss, then, you would say, right?
I would say a little bit of a coin toss, but with the momentum that we're seeing, I mean, maybe I'll play conspiracy theorist for a minute. Maybe we see some sort of nice drop tomorrow off of, whatever Fed headline. I think that might be a little bit of a buy the dip opportunity and an opportunity to maybe, we'll call it rearrange some of those derivatives. So, it could be an opportunity for them to potentially reload. And, maybe when things start to roll on Friday after maybe a little bit of profit taking tomorrow or Thursday, it could lead to a potential to continue on higher.
All right, so we'll be keeping an eye out on that, because obviously there's the potential for a decent amount of volatility around the Fed, and then naturally you got China econ data coming out a couple hours later. You've got the ECB the following morning. A lot of econ data in the U.S. here, including retail sales, industrial production, empire, manufacturing, Philly Fed. I'd be curious too, because the Philly Fed, that's going to come after that collapse of the road in 95, which a lot of commerce goes through there. I'm going to be real curious to hear how that might impact that region, which I don't think it's going to be factored into the Philly Fed, but a lot of stuff coming out in the next 72 hours or so. So that's going to just add to the mystique around that quad witching, I think, Brandon. So it should be an interesting couple of trading sessions, to say the least.
Yeah, as a guy who lived in Boston for 15 years and New England his whole life, missing a chunk of I-95 is not anything that we need on the East Coast or for our economy right now by any means. That's for sure.
I feel like they're still doing the big dig in Boston. How many years did that thing take? 10 years?
It took long enough, and back then that was when you had printout MapQuest directions too. So for me as a 16-year-old driving around Boston trying to find concerts, you'd pull up to a light and it'd say turn left, and you could only go right or straight, and then you'd be screwed because your printout didn't update for you.
Well, hopefully people will be able to get to the electric factory down in Philly and stuff still. But there's definitely going to be it's going to make for an interesting couple of months out there for sure. I know somebody that takes 95 to get back to Jersey. I'll be real curious to see what happens the next time I'm driving back down through there.
Yeah, should
But
be interesting for quite some time, unfortunately.
yeah. Well, Brandon, as per usual, thank you for joining us here. You got any parting shots before you go?
No, I think just I'll reiterate. Again, this wasn't like last week. I wasn't trying to scare anyone away from trading Coinbase options because it's a whippy stock. This was not a try to put fear into anybody on trading on quad witching day. I mean, like you said, Gavin, a lot of people do actually sit this one out. But just, again, not trying to scare anyone, just want everybody to know kind of what to look for. And, again, just with any options, just, make sure you know your risk and, be careful with them. And, definitely make sure that they're closed on this Friday in particular.
Yes, exactly. All right. Well, Brandon, always a pleasure talking to you on this. This has definitely been a fun conversation. If anybody's got any questions on anything, definitely feel free to write into feedback and we'll take a look at them and be happy to answer them. But Brandon, you have a great rest of your afternoon here, and I'm sure we'll be talking to you plenty over the next couple of days.
All right. Thanks, Gavin. Take care.
All right, you too. Take care. All right, everybody, we're just going to shut down audio here momentarily. I'll be relaunching it. I'll be posting the link to this discussion here for anybody that's interested on that. And again, if there's any questions out there on any of this, feel free to write in. We'll be happy to take a look at it.